Hello, welcome to another edition of Charts Chat. Today we're going to chat about something we get a lot of questions about, interest rates. Interest rates play a big role in a number of pieces of our clients' financial lives, whether they're looking at refinancing a home or making any large purchase with credit, putting money in savings or cash reserve, or looking to generate income in retirement. Interest rates play a pivotal role in determining the outcome of each of these financial decisions. At its most basic level, interest is the cost one pays for borrowing. Banks want to borrow from savers, so that home buyers can borrow from banks. Corporations want to borrow from investors, and governments need to borrow from citizens. Again, at a basic level, that interest rate is made up of a combination of demand from investors, what they get for their money given a level of risk, and the financial health of the borrower. Risky borrowers pay more, while safe borrowers pay less. So that's just a little bit about what interest rates are. Let's talk about where interest rates are going, and there are two areas I want to specifically focus on today. The interest you pay, like on larger purchases like a car or a home, and interest you receive, like when you invest in a bond, and what the economic picture tells us about both. First, let's look at the interest you pay. Many of the interest rates that you pay are correlated with what governments are being charged to borrow as well. For our first chart, here's a picture of the rate on a 30-year mortgage and 10-year treasuries going back to the early 70s. As treasury rates have declined over the last 40 years, so have rates on mortgages. But this does beg the question, how much lower can they go? To answer that, here's our next chart showing the aggregate bond yields of a number of countries. It's amazing to see countries like Japan at 0% or Spain at 0.3% compared to the US at 2.49%. If, like I said earlier, interest rates are a combination of investor demand and financial health, it's very difficult to reconcile the US being charged 8 times as much to borrow as Spain. Putting this all together, there are two possible outcomes. Either global interest rates rise to get closer to what the US is paying, less probable, or the US rate continues to decline until closer to that of other countries, more probable. What this means for you is that if you are planning on making a large purchase or thinking about refinancing, while rates may seem low today, there is a good chance they'll continue to drop in the near future or stay low for some time. Now let's talk about the interest that you receive. Many of you are starting to notice that you're getting better interest in your checking and savings lately. But while you might be getting better interest on your savings, you're also seeing interest on your investments in the form of coupons and dividends staying low. This can be very difficult for those on fixed income or needing that interest for daily expenses. To make up for this, some may go after lower quality borrowers or chase higher yields. We would caution against this. Investing in U.S. high yield or junk bonds, emerging markets, or more complex investments like convertibles and floating rate can produce higher yields, but at the cost of making the portfolio more aggressive. Should a correction come to the market, their overall portfolio may experience higher volatility than what they expected. For our clients, we're constantly analyzing what type, what interest rate, and how much to allocate to certain interest-sensitive investments. Recently, we rebalanced the portfolio to specifically address this coming issue of low interest rates staying low or going even lower. If you know someone who would like a second opinion on how their portfolio is constructed and how interest rates may impact them, we would be happy to reach out. So in conclusion, interest rates around the globe have fallen and continue to fall to historically low levels. This will impact many of your financial decisions, from what type of house you buy, to whether to refinance, to how much interest you earn in savings and investments. Having a plan and working with your advisor can help you make and save interest. Thank you for taking the time to listen today. If you have any questions, please feel free to reach out and let us know, and we'll look forward to talking with you again soon.